Hey everyone, and welcome back. We're diving into something pretty interesting today. Warren Buffett's been making some big stock moves lately, specifically big sales.
Right.
And we've got this article from the Motley Fool here.
Okay.
It's called, "These three stocks account for close to 90% of Warren Buffett's $36 billion selling spree in the September-ended quarter." So we know what he's selling, but, what's the why?
Right.
What's the strategy? What can we learn from this?
Yeah, and I think what makes it so interesting is that
Yeah.
he's been a net seller for 8 quarters straight.
Wow.
That's 2 full years.
Yeah.
And it seems like he's even selling more now.
Really?
Yeah, which isn't something you typically see.
Right. Especially in a market that's obsessed with buying.
Exactly.
Yeah.
So it's definitely going against the grain.
It is. So how do we unpack this?
Well, we get these glimpses into what big investors are doing through these things called
Yeah.
Form 13F filings.
Yeah.
These are public records that they have to file.
Okay.
And though Berkshire Hathaway's full 13F for the last quarter isn't out yet,
Right.
other filings and reports give us some pretty good clues.
Okay. So what are these clues telling us?
Well, one thing we know from Berkshire's own statements is that Buffett has been selling off way more stock than he's buying. And I'm not talking about small amounts here. Over the last 2 years, he sold a staggering $166.2 billion more in stock than he's bought.
Wow.
So that should tell you something.
Yeah, that's a lot of cash moving around. So which companies are we talking about here?
Yeah.
The article focuses on 3 big names, right?
That's right. The biggest one is Apple.
Apple, that's surprising.
Yeah.
They've been such a strong performer for so long.
Right.
What's going on there?
Well, from what we can gather, Berkshire sold 100 million shares of Apple, which we estimate is worth about $22.5 billion.
Wow.
Now, that's based on publicly available information,
Okay.
not the full 13F filing yet.
Yeah.
But it's still a huge chunk of stock to sell.
It is. Even though Apple's still their largest holding,
Right.
that sale really makes you wonder what Buffett's thinking.
Yeah, well, remember back in May, during Berkshire's shareholder meeting, Buffett suggested he thinks corporate tax rates are going to go up sometime soon.
Oh, right.
So it might be that he's selling now to lock in those gains at a lower tax rate. So you see, even if you don't have billions like Buffett,
Right.
this just highlights the importance of tax planning in your own investing.
That's a really good point. Okay, so what about the next big name on the list?
Yeah.
Bank of America, right?
Bank of America.
Uh-huh. Is something going on with them?
Well, we get a really detailed view of this one from these Form 4 filings.
Okay.
Since Berkshire owns over 10% of Bank of America, they have to report every single transaction they make with the stock.
Wow.
So in the last quarter alone, they sold 235.17 million shares,
Okay.
which comes out to $9.61 billion.
That's a lot of selling. Does this mean he's losing faith in Bank of America?
It's hard to say for sure. But this could also be tied to that tax strategy we were just talking about.
Right.
You know, locking in gains now before taxes potentially go up could be a really smart move.
Right. That makes sense.
Yeah.
But it's still a massive amount of money to pull out of one company.
Yeah.
It makes you wonder if he's getting a little cautious about the market in general.
Yeah, it's certainly a possibility. Plus, we know from their reports that Berkshire's cash position has been increasing, which could point to them playing it safe. You know,
Right.
maybe building up cash reserves for future opportunities.
Interesting. Okay, so we've got Apple. We've got Bank of America.
Yeah.
The article also mentions a third company, BYD, the Chinese electric vehicle maker.
Right.
That was a much smaller sale, wasn't it?
It was.
Is that a sign of weakness in the EV market?
Well, this one seems more about regulatory technicalities than market sentiment.
Okay.
Berkshire Hathaway sold just enough BYD stock to dip their ownership below 5% in Hong Kong. That's a key threshold because owning more than 5% triggers certain filing requirements there.
Okay.
So they sold 1,395,500 shares at an average price of $31.76 per share,
Okay.
totaling $44.3 million.
Okay.
Not a huge sale compared to the others?
Definitely not. So it doesn't sound like they're losing confidence in BYD then.
Not at all. In
Right.
fact, BYD is doing incredibly well, even surpassing Tesla in sales recently. This just looks like a technical adjustment, not a sign of worry.
That's good to hear. So we've got these big sales by a legendary investor like Buffett.
Right.
What's the takeaway for the rest of us?
Yeah. What can we learn from this?
Yeah.
Well, that's the question, isn't it?
Yeah.
It's fascinating to observe how someone like Buffett, who's built his reputation on long-term value investing,
Right.
is approaching the market.
Right.
What's the story these sales are telling?
Right.
Is he getting cautious? Is he seeing something we're missing?
Right.
Remember, this isn't investment advice.
Of course.
But it's always valuable to learn from the best.
Absolutely. We've covered a lot of ground here, but there's much more to explore.
Yeah.
When we come back, we'll dive into the potential implications of Buffett's moves and what they might mean for your own investment strategy. Stay with us.
Sounds good. Welcome back. Before the break, we were looking at what Warren Buffett's been up to,
Yeah.
his recent stock sales,
Yeah.
and what it all might mean for the markets.
Right. It's like we're trying to get inside the Oracle of Omaha's head, right?
Exactly.
Like, what clues are we supposed to take from this?
Well, and that's what makes it so interesting. We're talking about a legendary investor
Yeah.
with a long track record
Right.
of successful long-term value investing.
Yeah.
So when you see someone like that selling this much, this consistently,
Right.
it really makes you stop and think,
It does.
is he sensing a change in the market?
Yeah. It's almost like he's sending us a signal.
Yeah.
So if we were lucky enough to be sitting across from him right now, what are some of the big questions
Oh, absolutely.
that we should be asking?
Well, I'd certainly want to get a better understanding of his long-term outlook for these companies he's been selling.
Okay.
Is this just a short-term adjustment? Or does he think they're past their prime?
That's a great question, especially when we're talking about a company like Apple, which has been so dominant for so long.
Right.
Is this a sign that he thinks the era of big tech is coming to an end?
Well, it's a possibility.
Yeah.
Buffett has always stressed the importance of investing in companies that have a lasting competitive advantage.
Yeah.
What he calls a moat.
Right. The moat.
Exactly.
Yeah.
So maybe he's seeing those moats shrinking,
Yeah.
due to new competition or shifts in what consumers want.
It makes you wonder about the life cycle of even the biggest companies, right?
Right.
How even the giants can fall if they don't adapt to changing times.
That's exactly right. And that's why it's so important to look beyond just the numbers
Yeah.
and try to understand that bigger picture.
The story.
Yes.
Yeah.
What's the story behind these sales?
So we've got that question about his long-term outlook. For these companies, what else would you be curious to know?
Well, I'd be interested to learn more about his current cash position
Okay.
and what he's planning to do with it.
Okay.
We mentioned earlier that Berkshire Hathaway's cash reserves have been growing.
Right.
So does that mean he's feeling cautious about the market overall? Or is he just strategically biding his time waiting for the right opportunity?
Like he's waiting for the right moment to strike, just like a patient hunter.
Exactly. And this is why understanding his investment philosophy is key.
Yeah.
He's not a day trader looking for quick profits.
Right.
He's a long-term investor looking for undervalued companies with strong fundamentals.
Right.
And when he finds an opportunity that meets his criteria, he's not afraid to make a big move.
So maybe it's not about being negative or positive on the market as a whole, but just about finding those diamonds in the rough that other investors are missing.
Precisely. And that's a valuable lesson for anyone, no matter how much experience you have. It's about doing your homework, understanding the businesses you're investing in, and having the patience to wait for the right time to buy.
It's almost as though we're getting a masterclass in value investing just by observing his actions
Yeah.
and trying to understand what's driving his decisions.
That's a great way to look at it.
Yeah.
And that's why having good sources of information like the Motley Fool article we're using today is so important.
Right.
It helps us connect the dots and see that bigger picture.
So we've talked about his long-term views on the companies, his cash position.
Right.
What else stands out to you?
Well, we can't overlook the tax implications of these moves. We touched on it earlier.
Yeah.
But it's worth emphasizing Buffett is brilliant at minimizing his tax burden.
Yeah.
And these sales could be a strategic way to take advantage of the current tax rates before they potentially go up.
That's so important. And it's so easy to forget about the impact of taxes when you're caught up
Right.
in the excitement of the market.
Yeah.
But for someone like Buffett, who's dealing with such large sums,
Huge sums.
those tax savings can be really significant.
Absolutely.
Yeah.
It underscores the point that investing is about more than just picking stocks.
Right.
It's also about managing your portfolio
Yeah.
in a way that's tax efficient.
Okay, so let's shift gears a bit and talk about the wider market implications of all of this.
Sure.
What are some of the key takeaways for everyday investors like ourselves?
Well, one interpretation is that Buffett's selling spree is a cautionary signal about the broader market. Remember, he's been a net seller for 8 quarters in a row now,
Yeah.
and he's selling more now than ever before.
Right.
So maybe he's simply not seeing many attractive investments at the current prices.
So it's as if he's saying, I'm happy to wait for better prices before I jump back in.
That's a good way to think about it. It's a great reminder for all investors.
Yeah.
It's perfectly okay to be patient and wait for the right opportunities.
Yeah.
Don't feel pressured to buy just because the market is going up.
So we're seeing consistent selling, which could signal caution about the market and a growing cash position, which suggests he's either waiting for the right moment or waiting for a dip in prices. What else should we be paying attention to?
Well, it's always smart to consider the broader economic landscape.
Okay.
We're in a time of uncertainty with rising interest rates, concerns about inflation and geopolitical risks all over the world.
Right.
All of these things can have an impact on the stock market. And it's very likely Buffett is taking all of them into account as he makes his moves.
It's like he's trying to anticipate what's coming next,
Yeah.
reading all the signs, not just focusing on the numbers,
Right.
but factoring in all these external forces that can influence the market.
That's a good way to put it. And that's why it's so important to stay informed and aware of the bigger picture.
Right.
Don't just focus on individual stocks, but also consider the broader economic and political trends that can affect your investments.
So we've got a lot to consider here. Consistent selling, increasing cash reserves, potential tax strategies.
Yeah.
And the overall economic context, it's a complex puzzle that we're trying to piece together.
And that's what makes it so fascinating. Investing isn't just about numbers.
Right.
It's about understanding human behavior,
Yeah.
market psychology,
Right.
the things that drive the global economy.
It's a never-ending learning process.
It is.
There's always something new to uncover, some new trend to analyze, a new lesson to learn.
You got it. And that's why we do what we do here on the Deep Dive.
Right.
We love exploring these complex topics and helping our listeners make sense of it all.
Couldn't have said it better myself. We've covered a lot in this deep dive so far.
We have.
But there's still more to come. When we return, we'll explore some possible scenarios for the future.
Okay.
And what it all could mean for your personal investment strategy. Don't go anywhere. All right, we're back, and we've been trying to understand what Warren Buffett's stock moves might mean for the markets.
Yeah, and it really does make you think.
It does. It's been fascinating,
Mm-hmm.
but also kind of a head-scratcher.
It is. We've seen these big sales, a growing cash pile. It's like he's preparing for something.
Exactly. So let's put on our thinking caps for a second.
Okay.
Let's imagine some scenarios here.
Right.
What if all this selling is a sign that Buffett sees a market correction coming? What would that mean for the average investor?
Well, a correction can be unsettling, especially if you're not prepared for it.
Yeah.
But it's important to remember that they're a normal part of the economic cycle.
Okay.
They happen periodically, and they're usually followed by periods of growth.
Right. That's good to keep in mind. But for someone who's maybe newer to investing a volatile market, can feel pretty overwhelming.
Yeah.
What are some practical steps we can take to kind of navigate a downturn?
One of the most important things is having a well-diversified portfolio.
Okay.
Don't put all your eggs in one basket.
Right.
Spread your investments across different types of assets like stocks, bonds, real estate.
Okay.
That way, if one area of the market takes a hit, you're not overly exposed.
So it's about spreading the risk.
Yeah, so you're not totally caught off guard.
Okay.
And having an emergency fund is crucial, too.
Yeah.
A cash cushion can help you avoid making impulsive decisions if the market gets rocky.
That's like having a financial safety net.
Exactly.
Okay, so let's say we've got our portfolio diversified. We've got a solid emergency fund.
Yeah.
We're mentally prepared for a potential correction. What else should we be thinking about?
Well, this might seem counterintuitive, but market corrections can actually create buying opportunities. When prices drop, it's like a sale.
Oh, I like that perspective.
Yeah.
So instead of panicking, we should be looking for those undervalued assets that have become more affordable.
Exactly. A correction isn't necessarily a disaster. Think of it as a chance to rebalance your portfolio.
Okay.
And maybe pick up some bargains.
So maybe Buffett's selling spree is a sign that we should be getting our shopping lists ready.
Maybe.
Of course, we're just speculating here.
Right. We can't predict the future with certainty. The important thing is to be prepared for different scenarios.
Right.
And make decisions that align with your own personal circumstances.
Of course.
And your risk tolerance.
That's a great reminder. This whole deep dive has been so insightful. We've learned about diversification, the importance of an emergency fund staying informed.
Right.
And even finding opportunities during uncertain times.
Absolutely. And never forget, one of the most valuable lessons of all is to keep learning.
Yeah.
The market is always changing, and the best investors are those who are constantly expanding their knowledge and adapting.
Couldn't agree more. Well, it's been a fantastic journey, and I want to thank you for sharing your expertise with us today.
It's been my pleasure. I always enjoy these deep dives.
And to our listeners, thank you for joining us on this exploration of Warren Buffett's recent stock sales. We hope you've gained some valuable insights to help you navigate the world of finance. Remember, knowledge is power, and the more you learn, the better equipped you'll be to make sound investment decisions. Until next time, keep exploring, keep learning, and happy investing.